Hello and welcome to Deal Makers. The deal street is coming alive and the timing could not have been better. The most anticipated budget in years is just around the corner. While Finance Minister Arun Jaitley is giving final touches to the budget document, India Inc. is waiting with bated breath. Will the Modi government be successful in reviving the investment cycle? And what impact will that have on Deal Street? To discuss this, I'm joined by two gentlemen who have the money, might and intend to invest. So what's going to drive them to take that bet? Let's find out from Sanjiv Goenka, chairman of RP-Sanjiv Goenka Group, and Amit Chandra, MD of Bain Capital, joining us. Gentlemen, so good to have you on the show. My first question would be to Mr. Goenka, joining us from Kolkata. Mr. Goenka, for promoters like you with fire in the belly, you think the time is ripe to invest once again in the Indian economy?
Yes, I think so. I think after many years, the urge and the confidence to invest in India is coming back. There is a belief that the government will provide a stable and worthy environment for investment. So after a long time, India Inc. is re-looking at investments and preparing to invest. I think between the time you start looking to invest and you actually invest, there is a time lag. So before you see anything on the ground, there might be a little bit of time. But clearly, I think after many, many years, people are looking to reinvest.
Coming to you, Mr. Chandra, being a foreign investor, now, Bain Capital has made 5 investments in the country so far, but the times have not been so good for private equity investors in the past few years. Now you think the foreign investors are steering their attention towards India and it is being seen as a better destination than it was seen earlier?
I think India at this point of time seems like one of the best places in the world that you want to look at. And I think we should not forget that often investing is about making choices, and the choices you make are often macro choices, which is which country you want to invest in. So there's a degree of relativity which is very, very important. And we are seeing India revive at a point of time when there is actually a lot of gloom in many other parts of the world which would compete for the same pools of capital. US, of course, being an exception, which is also showing strong growth. So I actually think that things are really building up nicely for the private equity industry in India at this point of time.
So, Mr. Chandra, how big is the budget going to be?
The budget per se is a little bit overhyped as an event. I think what's important is more the signals that it sends than actually a lot of its specific provisions. And what I mean by that is, essentially people are looking for stability in policies. They may not fully agree with all the policies, but as long as you have a relatively stable framework, I think that's important. The second thing people are looking for is the removal of irritants, things which really cause a lot of concern because the environment is not really ready for it. GAR is a good example. Elimination of retrospective taxes is another good example. Defining, bringing in a framework for indirect transfers that is sensible is an example. So if we actually take away some of the irritants which make it difficult to bring either money into the country or do business on a day-to-day perspective, I think we would achieve a lot. And the third thing I think that people are really looking for, particularly from this budget, is the government's relative focus between investment as a way of creating prosperity versus subsidies. I think we should have subsidies, but we need to have sensible subsidies. And the fact is that there are lots of schemes of the government which are not efficient, and there are lots of wasteful subsidies.
Right. So, Mr. Goenka, as corporate India, what is it that you are expecting from the budget? Though it's just one-day event and lots of reforms and policy changes have been happening, I would come to the tax bit in a short while from now. But as far as corporate India is concerned, you are present in capital-intensive sectors like power. What is it that you are watching out for? And do you also think that corporate India has a case for lower corporate taxes so that the business environment is more conducive in challenging times like these?
Quite honestly, we can always want more, we can always expect more. And there will always be a wish list from corporate India. But essentially, if there is simplification of taxes, there is simplification of the processes, if there is a simplification of the mindset where corporates are not treated as guilty until proven innocent, I think that would go a long way beyond the considerable distance that this government has already taken us.
Right, Mr. Chandra, you were talking about the normal irritants from the tax front, but don't you agree that past two cases, and I would cite the examples of the two cases in which one of them was Vodafone's transfer pricing case, in which the Attorney General opined that there shouldn't be an appeal in the higher court after the Delhi High Court gave its verdict. And on the second case was Tata Docomo's case, where the RBI said that the put-call option of the agreement should be honored. Don't you think these are signals sent out in the right direction and would allay a lot of fears that foreign investors have about India?
Absolutely, Nisha. I think those were extremely welcome and very, very sensible moves. And what I meant was that I think people will look for further strengthening of those kind of approaches in this budget, because there still is a little bit of ground to cover. Your newspaper, for example, has talked about the whole issue of indirect transfers more broadly, and some direction is expected in the budget on that. So I think there is still ground to cover, and people will look for some continuity in those two examples that you talked of, which were more executive action than legislation.
And what about buyback being taxed and also MAT? Are these some of those irritants which you'd want clarity on from the budget as well?
I actually think that if the government even doesn't, go out and honor the full ask on rates, but shows more, flexibility in making sure that there is consistency, there is clarity, and that the bar on frivolous and challenging litigations is raised, I think people will welcome it.
Mr. Goenka, what do you think regarding the investment climate? Do you think that the government has done enough in defense, in insurance, though it had to take the ordinance route, but then things would sort out in coming times? Do you think that such FDI caps being relaxed in more and more sectors will give much more headroom to corporate India to grow, bring in more investors, and also invest more in the country?
Absolutely. And I think in the short period, the government has already done quite a bit. And there is promise of more to come. I think relaxation of FDI is one area, opening up areas is another thing. But I think what will really, really make a huge difference would be just simplification of the environment, of the rules, of the regulations. You have this thing where different rules can be interpreted differently. And if you interpret them differently, then you're hauled up for not complying with them. Sometimes one feels that one has to learn law before you get into corporate India. That is the mindset of the previous governments. We do hope this government will move towards simplification. And the plethora of approvals that are required before you can set up anything, so could that whole process be simplified? So as far as I'm concerned, yes, we are always happy with the more we get, but what I really would want to see is simplification of regulations, simplification of the procedure, just the ease of doing business in India. That to be strengthened.
Doing business is something that the government has been harping on for a long time, and single window clearance is also one of the things that the government is now working towards. Tell me, how big a deterrent at this point is the higher interest rates? Because in capital intensive sectors, the ones in which you operate in, isn't it a big deterrent with the debt pile that has been mounting for corporate India? Is more aggressive interest rate cut the need of the hour?
Clearly, interest rates are a deterrent. Interest rates are high, and we would definitely expect to see them come down. And we hope in the nearer future rather than the medium-term future. The finance minister has gone on record to say that there would be a correction of interest rates, And we hope that happens sooner rather than later.
Just to add to Sanjeev's points, I think interest rate reduction will have a massive implication on macroeconomic outcomes and on further sustaining and giving a boost to the India story. First of all, I think we are just at the cusp of revival of the investment cycle. My own sense is the investment cycle will take another 6 to 12 months to start reviving fully. And when that happens, by then if you have lower rates, it will really facilitate rapid creation of capacity, which I think in a country like India, which is massively supply constrained, is very, very important. So I think it's great for the corporate sector if rates fall over the next 12 months. Fact is, if you take a 20-year or a 50-year view on what's going to make India, it's going to be education. And I think I would love to see concrete steps coming out, including allocations for education in the budget. I would love to see, again, it's not a budget item, but I'd love to see greater emphasis on judicial reform, because the fact is that corporate India gets massively slowed down by the uncertainties of India's judicial system.
Mr. Goenka, even though we see that sentiment is right now, mood is good in the economy and everybody is looking upbeat, but Mr. Chandra also said that we are at the cusp of investments. We are going to see real investments kick in only 6 to 12 months from now. What is the timeline you are looking at? And reality does not reflect the mood, I would say, because the corporate earnings have been really shoddy in this particular quarter.
Quite honestly, from the time you think of investing to the time you decide to invest, there is a little bit of a time lag. From the time you decide to invest till the time that you actually land up investing, there is another time lag. Because then you have to acquire land, you have to go through all the approvals, you have to organize all your debts. So that is time consuming. And the processes are such that it takes forever. So from the time you actually decide to invest in a project till the time you actually get to zero date, it could be 12 to 18 months in many cases. The only state where things move very fast is Gujarat. In any other state and every other state, it just takes very long. So if this period could get shortened, you will see the investment cycle or the time lag between decision to invest and actual investment narrowing. And that is what we would hope to see. But my own sense is that before you would actually see investment on the ground, because of the sheer logistics, because of the sheer inertia of the past, it would be probably 12 to 18 months.
All right, on that note, we'll slip into a short break here, but more focus on the deal scenario on the other side. Stay tuned. Welcome back here with Deal Makers. Coming to Mr. Chandra. Mr. Chandra, where we left, the earnings cycle has been particularly shoddy in the last quarter. As an investor, do you think it's the right time to invest, especially when corporate earnings aren't doing that well?
Yeah, Nisha, I think it's a great question. And if you really step back and think about this from a long-term perspective, I think it's important to divide periods into two buckets. I think there's a short to medium term period when earnings is going to be driven more by improved consumption and sentiment. And there's a longer period when earnings will be driven substantially by improved investments. When you bring together the combination of lower rates and lower working capital, you'll actually see interest costs as well as a percentage of sales decline. And so when you bring together better growth, margin improvement on EBITDA margins, and then financial leverage, you'll actually see very strong rebound in earnings. I think it's very tough to specifically call this, which is why I think, again, expectations were a little ahead of reality and people haven't seen the growth that they expected in profits. But is it likely to happen over the next 12 to 24 months? I think very high probability that it will.
Mr. Chandra, that some money from Bain Capital is also going to trickle into the Indian economy by way of some investments then?
Economic environment that we are seeing now, and with improvement in deal flow, I would be surprised if India is not one of the places where we substantially up our investments.
Now, we have seen the first instance of an interface between corporates and the government in the coal auction process, and it started on a very, very negative note with legal tangles all across. How has been the experience? Is this government any better than the previous?
Well, you know, this is something where the process is on, and it's not something that I would like to comment on while it's on. But I think they've moved with speed, that is for sure. I think they have moved to address some of the issues, that is again for sure. But I think there are some issues which could still be addressed.
Though it brings about more transparency and more surety about coal availability, this entire coal auction process, but does it not make it more expensive to produce power now?
Well, I think overall the costs definitely in a way go up. And the only one thing I'd like to say is that I'd like to see there are say 35 or 40 power producers, and there are few blocks which are reserved for the power sector at this point in time. And that is leading to a very intense competition and very high prices. So to my mind, what I would have really liked to see was a larger base of mines such that the pricing would have been more realistic. But having said that, that doesn't take away from the fact that the government has moved with great speed, and things look a lot more definite than they've ever looked before.
You just recently did MCure as well. So now are you steering clear of all these capital intensive sectors because of the regulatory hurdles?
So Nisha, historically we have steered away from regulated sectors, and you know, the main reason for that is typically returns in regulated sectors tend to be lower than returns in other sectors. So we are just not a specialist real estate and infrastructure fund, and that keeps us away from these sectors.
So Mr. Chandra, which would be your next destination? Which sectors are looking good at this point for investments for Bain Capital then?
Our hope is that there will be a lot of opportunities linked to consumption and particularly the growth of the Indian middle class in the medium term. And, you know, MCure is a good example of that. Healthcare affordability is going to drive a lot of opportunity for pharma companies in India. You know, and I think there will also be increasingly, as we'll get closer to the investment cycle, lots of opportunities linked to investments. I think the broader industrial sector, and, you know, you talked about auto, has been actually a very good experience for us. And I think there will be more opportunities once, you know, people need to buy more automobiles, you know, once people need to build more roads, you'll have, you know, the cement sector doing well, you know, and so I think there'll be opportunities across the spectrum, just like they were before all of this, the party ended, you know, 4 or 5 years ago. So I actually think that we're going to be pretty broad-based.
Your LP is now supporting more India investments now. Is it easier to raise funds when it comes to investments in India? Because the portfolio still has a very high carrying cost for all the investors overseas, whoever invested in India in the first round.
No, absolutely. You raise a very good point. I think investors are definitely more circumspect, you know, whether they be GPs or LPs. I think people are more circumspect. There are lots of lessons to learn from the last cycle, and I think people hopefully will put those lessons to good use, and the track record of investing in India will get a lot better. And typically, I mean, this is in some ways a process of maturing, and I think the Indian private equity industry is maturing along with that, along that curve. But I do think LPs are feeling better about India.
The current cycle also presents an opportunity for many corporate houses, many promoters like yourself, to scale up to another level altogether, to jump higher, to catapult themselves. What is the kind of opportunity that you are looking for? Are there many more sectors that you're eyeing for diversifying as well?
Yes, there are opportunities in multiple sectors, good assets in some, stressed assets in some, and we are looking at all very closely. Well, the power sector also offers a lot of stressed opportunities. some of them which might be worthwhile, some of them which might not be worthwhile. And yes, we will look at the ones which we believe are worthwhile.
Do you also think that the cycle and the churn has come in which some of the corporate houses would fall by the wayside as well? There's going to be an entire cleansing process in a few years from now. The entire corporate landscape would be a lot different from what we are seeing right now. How do you foresee this?
It is really people who have cash flows, who have access to capital, who have the vision and who have the appetite, who will grow faster than the others. And you will see a lot more consolidation than you have seen in the past. So clearly, yes, the landscape may change, but I think that's an inevitable part of developing any economy.
Are you convinced at least about the kind of valuations that the equity markets are presenting themselves with, or do you think they've overrun and they are too hot at this point for making any sort of commitments in there?
Yeah, Nisha, it's very interesting. I think the markets actually have obviously run up a lot, and I think the case for them keeping similar pace over the next year or two is definitely relatively a weak case. That doesn't mean that the markets are overheated and a massive correction is overdue. It's just that if markets continue to remain growthful, the pace of growth will be somewhat muted, at least in the short term, and then will be dictated a little bit more by the earnings growth cycle that I talked about from a medium to long-term perspective.
Is it opportunities for the private equity players as well?
Yes, I think for the private equity players, we'll have to be a little bit more patient, as I said, because the fact is that while deal flow is improving, it's still secondary deal flow, where folks who have been invested in companies for a long period of time are coming to market to sell their companies. I can certainly say that 2015 is likely to be a better year for private equity from an investment perspective than 2014, but I think 16 is going to be far better.
Spencer's IPO has been waiting for a very long time.
Clearly, the environment is conducive to fundraising, but I had said earlier, and I would stick to what I had said earlier, the moment Spencer's as a company gets to EBITDA positive, we will actually plan and go ahead with our fundraising and capital restructuring.
What all you are waiting to see in the budget from Arun Jaitley when you sit down on that day to take notes from what Finance Minister had to say?
Quite honestly, I would, for me, the most important thing would be simplification of rules, regulations and procedures. Just helping the mood of invest in India further. I think simplification of the tax procedures. We'll always be happier to see tax rate cuts and all that. But I think, corporate India has to get out of this mindset of asking. Just ask for a better environment, easier to operate in atmosphere, simpler rules, and just be left alone without being hassled.
Right, and finally, Mr. Chandra, I'll let you have the last word. Is the government now dealing with great expectations? In fact, expectation management would be the most important thing in the budget for them, you think?
Yeah, I think the government has to give it its best shot, and it's for us to figure out how to have realistic expectations from that. I think, for me, as long as we get a stable government which addresses irritants from a tax perspective and shows a desire to maintain fiscal prudence and use its powers more carefully to take away from wasteful schemes, be it subsidy oriented or otherwise, and allocate them towards important social infrastructure. If we see the signs of all of that, I think it will end up being a great budget.
All right, so balanced approach from our speakers. Pare down your expectations. Economic recovery is a long-drawn process, and Mr. Goenka as well as Mr. Chandra feel that the real recovery is at least 12 months away. But the union budget will give the economy the right push in that right direction. Thanks, gentlemen, for your valuable thoughts on deal makers, and thanks to our viewers for joining us.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.